Hello everybody. So folks, as I record this and I work on this video, I am noticing that the Nasdaq is literally down peak to trough from the morning, up and up 1%, now 4% down. Literally a 5% delta in the Nasdaq today on Tuesday. May I remind you that Friday we had an epic crash. These type of moves are not supposed to happen 2 days apart. They're supposed to be once in a blue moon type of moves, and they seem to be happening all the time in this market. All the time in this market. The market is wild. It's absolutely crazy. And of course, the topic of this video is about the hottest IPOs of the year. And, I think all of these IPOs are extremely expensive. I don't want to touch any of them. But I have no idea what the stock's going to do. Absolutely no idea what these stocks are going to do because the market is on casino mode. Sometimes you play a game, you can put it on different mode. The market has been on casino mode. Sense making has gone out of the window. So anyways, let's talk a little bit about the market. And it seems like tweets have a bigger impact, of course, on the market than actual facts. The market tanking, of course, because of a truth post today about possible escalation in the Middle East. Anyways, the market is fearful about liquidity perhaps coming out of a Nasdaq S&P. And one of the points I want to say is that in pure internet fashion, they don't look at the details. They tell you, oh, look, you look at this, you'd say there's 3.8 trillion of liquidity that's going to be sucked out by these free IPOs, SpaceX, OpenAI, and Anthropic. And I want to say it right away. This is not the way it works. The liquidity that's going to be taken for SpaceX is going to be something like 75 billion. And OpenAI is actually going to be smaller. Anthropic too, in my view, I think they're going to be smaller. I don't really know, but I think they're going to raise smaller amounts of money. So the point is, yes, this sucks out a lot of liquidity in the system, but it doesn't suck out the entire headline amount of 2 trillion or 1 trillion or 3 trillion. So even though the headlines are spooky, I would argue this is a little less spooky than the pundits will make it seem. But why am I not entering these IPOs? Because most IPOs drop after going public. In fact, it's about 80% who are way more down, something like 6 months after the IPO. I'll be staying away from all of these IPOs, even though I believe, at least for SpaceX and Anthropic, I believe that these two are absolutely amazing companies. OpenAI, I could put into the mix, even though OpenAI, I think, has lost a little steam with ChatGPT. ChatGPT has lost some of its shine, and of course, there's newer versions of ChatGPT that are really good and may even compete with Claude, but it seems like the public has selected Claude as its winner. So I don't know how this bodes for OpenAI, even though under the hood I hear their models are really, really good. I personally use some Anthropic. I use a lot of Grok personally. I use some Gemini. But I know Claude is really, really up there. But we should know. And by the way, these are all AI companies, right? XAI, OpenAI, Anthropic. These are all big chatbot companies. We should know that if you look at the benchmarks, they just one up each other. Like every other month, one will have a newer model. And so sometimes being faithful to a brand, I think, is what could lead to some of these models being successful. And Claude really is benefiting from being a second mover here and really gaining traction with its new models like Mythos and creating a lot of very good marketing buzz around the Claude models. So anyways, we'll see how this goes. But I want exposure to these. I believe these are real. But where do I get exposure? I get exposure elsewhere, not in these stocks, which presumably will be insanely volatile, probably way more volatile than the Nasdaq has become. So anyways, where does one get exposure? Well, let's talk about Google first of all. 3 years ago, the beginning of the channel, I still had my avatar. The beginning of the channel 3 years ago, I was talking about why I own Google. And again, that's because Google owns 7% of SpaceX. You see, 3 years ago, SpaceX was valued at 125 billion. Today, SpaceX is valued at 1.8 trillion. So the 7% of SpaceX that Google had 3 years ago, they did a 10x on that. So no wonder Google is actually buying some compute from SpaceX, given the value of their own equity stake in SpaceX. To me, Google 3 years ago was a perfect way to get exposure to SpaceX, and you've been rewarded handsomely if you've owned Google. Google, I find very expensive on my spreadsheet. I find that Google has gone up too far, too fast, and that's also because the market had taken Google down too much. If you remember 23, 24, the market was telling you that Google was going to go out of business, replaced by ChatGPT. Kind of making shortcuts here in the narratives from the market. So anyways, another reason to own Google, why I like Google very much, is that they own 14% of Anthropic. So Google, you get SpaceX exposure, you get Anthropic exposure. Okay, let's move on to the next hot IPO, which is likely coming in the coming months. That's Anthropic. Maybe in the early fall. We'll see. So Anthropic, you know my play. I haven't been shy about this. I've published extensively about this on the channel. It's Zoom. Zoom has something, I can't really pinpoint it, but to me it's like 1.2%. Some people say it's just about 1%. When I calculate it, I get to 1.2%. That's what they own of Zoom. And of course, and Zoom has a lot of cash, and that's 1% of Anthropic. They own 1% of Anthropic. Of course, Zoom doesn't own 1% of Zoom. They own 1% of Anthropic, but Zoom is a company that is very stable. Revenue is very stable, very little growth, but they have a lot of cash on balance sheet. And if you actually do an Anthropic adjusted value of Zoom's, if you value Anthropic at say $1 trillion, Zoom is kind of worth zero in the market right now, especially when Zoom is down 15%. Zoom is down 15% since early June, because again, down 15% is what the market has granted every single risk asset for the past 7 days, right? Bitcoin is down about that, by the way. I talk about Bitcoin on this channel, Bitcoin crash, that's down about 15 to 18%. Everything's down 15 to 20%. So Zoom is down too. Whatever. Amazon over the same period is down 12%. So the market's clearly not noticing any of these. Amazon's ownership of Anthropic or Zoom's ownership of Anthropic is not being noticed by the market. Amazon is the biggest Anthropic play. Amazon owns 21% of Anthropic. And so Amazon, in my view, I look at Amazon and I see it as having also a margin of safety. I don't think Amazon is a stock that is that expensive, considering that they are the leader in both cloud and in e-commerce. And they're actually not that expensive in my spreadsheet. At least Google is the only one that's a little expensive in my spreadsheet, but in my view, Zoom or Amazon provides exposure to Anthropic with a certain margin of safety that I am not sure one would get if they buy pure Anthropic and want pure exposure to Anthropic. So you can see big tech here winning, right? Google, Amazon, Zoom. Well, Zoom is not really big tech, but you know what I mean. Moving on to the last big tech, which gives you a lot of exposure. And I'll conclude this video with that. I was going to make it longer, but, with the pain in the market today, I need to look at the market. So I was going to develop this further, but anyway, OpenAI. OpenAI, if you want to have exposure to OpenAI, it's Microsoft. Microsoft is the play to have exposure to OpenAI. Microsoft's going to make a lot of money from both running the models of OpenAI and also from the IPO of OpenAI at 27% stake. Many would argue that Microsoft is actually too exposed to OpenAI. They've really bet the farm on OpenAI. And so for the sake of Microsoft, you gotta hope that OpenAI, stays on its own and holds on its own in the competition and remains high up, because Microsoft kind of put all of its bets in one basket by going all in like that in OpenAI. I think Microsoft is slightly cheap, but it's not as cheap as an Amazon. It's not as cheap as a Meta, but I think it's slightly cheap right now, and you can see it's par for the course. Microsoft, I didn't draw it here, but Microsoft down for 1 year, down 15%, and also from that peak, it's also down quite a bit. It's fallen with the market given its size with the indices. Microsoft, of course, lagging the rest of the Mac 7 because it has been caught in this software sell-off, right? Oh, so SaaS sell-off. And Microsoft has a little bit of a SaaS business, even though they are. If Microsoft is a SaaS business, I would say Microsoft is the apex predator of all SaaS businesses. So I wouldn't be so quick as to group them into a lot of software. But Microsoft, unfortunately, has been grouped in a lot of software ETFs and included in software ETFs. Hence, I think some of the explanation for that sell-off. But if one believes heavily in ChatGPT and in OpenAI, Microsoft is the proxy, in my view. That's the proxy, and in my view, way less volatile, of course, than what OpenAI is going to be. OpenAI might actually be one of the most volatile of the three out there, given how I would say flamboyant the CEO of OpenAI is. But then again, you could say that for SpaceX as well. So anyways, I much prefer the exposure of the stability of proxies compared to these new issues, these new IPOs, which, if the market is an indication, I think they are going to be wild, because this market is just getting more and more volatile as the years of 2020s go by. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.